Thanks everyone for having me. Got this. Okay. Look, I realise we're running a little bit late today, so I'll try to, at the very least, keep this on time, maybe even bring it forward a bit. The presentation which I'll be given, it's on the ASX platform, so I won't be running through the whole thing. Some of the more detail there you'll be able to pick up from there. But I really want to highlight some key points around vital metals and what we are doing at the moment in Canada. We are going to be Canada's first rare earth operation. Our Mineralogy project up in the Northwest Territories, mining operations have commenced. We are working forward as well in building a extraction plant in Saskatoon, with the schedule currently sitting that first feed into that operation will be by the end of this year. We also have the rights to another project in Tanzania. That one there, we're currently in discussions with the Tanzanian government about a mining licence. For a quick overview on the project, rather than me talk through things, I just have a very quick summary here. Following the raising of about $43 million a little over a month ago, we have activated our mining contract and have mobilised our mining fleet across an ice road built on the Great Slave Lake. Mining operations have started with pre-strip currently underway. The operation at Mineralogy will be a sorting operation. We just use straight X-ray sorting. Will be the only rare earth mine where that will be the sole process to produce a beneficiated product, and that will achieve a concentrate grade over 30% to 40%. And that certainly stacks up with any other rare earth project in the world. What that means is by having such a high concentrate grade, it puts us in an ideal position to become our target of being the lowest cost producer of rare earths and rare earth feedstock. As a company, as I mentioned, we recently raised a bit over $40 million, and that will be used to obviously fund our mining contract. Now that mining contract will put about 100,000 tonne of ore on the deck, and that should last us about 3 years. It will also be used to fund our capital program and also the commissioning and operations. One of the key things, and what I believe is a key difference of Vital, is our entire management team has come out of the rare earth industry. We are experienced at developing rare earth projects. We're not just looking at feasibilities. All of our guys have taken these projects through to operations. We have the scars to prove it. We know what has gone wrong. We know what bottlenecks there can be, and all of these things, all of this knowledge and experience is being used to develop this project. Rare earths and the rare earth industry is currently in quite an interesting place. Right now, we're seeing government legislation around the world focusing on renewable energy, electric vehicles. In addition to that, you also have a situation where there are geopolitical issues at play, where there is a real focus on establishing rare earth supply chains outside of China. And this is where we are really in a unique situation. As I mentioned before, we will be Canada's first rare earth operation. We will also be the first rare earth operator in North America to have a complete supply chain through to a mixed rare earth carbonate in North America. We'll also be co-located with a separation facility in Saskatoon. Being in Canada means that we are ideally located to either transport and sell product into the US or across to Europe or Southeast Asia. So it really does put us in a unique position. The European model is really a very interesting one for me. Our first rare earth offtake partner is with a Norwegian company called RIU, and RIU are well established within the EU market. The approach which we're taking for developing these rare earth projects, and this is really where the experience which we've gained over the last 15 years comes into play. We're taking a slightly different approach to a typical model. One of the things we've identified is that as I mentioned before, the rare earth market, really, its time is now. So if you're a company who wants to take advantage of that situation, you have to be in operations now. And that means you need to take a different approach. You can't say, well, we're going to build a massive project, we're going to take 3 or 4 years to build it, then commission it. Because that means you're looking at 4 or 5 years down the track before you're selling product, and the market will have shifted by then. Our focus, therefore, is on near-term production. We have sized this project to enable us to move quickly, to enable us to get into operation within the next 12 months. From there, once we are in operation, we can then scale that up. Now, that's really important, because one thing which a lot of people forget and maybe don't realise about rare earths is that, unlike iron ore or copper or some of those other commodities, it's not a case of what you produce you can sell. You have to actually match customer demand. You have to go through a very rigorous customer acceptance protocol, and that means the first years that you sell to a new customer, you can only sell a small volume of product into them, and by then they will then test that product to determine whether or not it meets their requirements, and only then can you ramp it up. So this is the approach that we're taking. So we start here, and then as customers accept our product, we ramp that up before we get to that large scale. The alternate method, you build a large plant, takes a number of years to build, then when you go through that ramp up, you have this unrealised capital. And that's something which we've identified in the past as being a key risk for rare earth projects. We saw it with Lynas, we saw it with MP Materials, where they built large plants, had a lot of capital tied up in it, a lot of debt, and then it's put them under enormous pressure during ramp up as they've gone through that customer acceptance process. So for us, we're developing this over a number of stages. The first is what we're calling the North T. Now, North T project, to me personally, is about the best little deposit that I've seen in the world. A number of reasons for that. One is exceedingly high grade. The second is that it has incredibly easy to process. As mentioned before, we're able to beneficiate it through simple ore sorting. Production there will start this year. From there, we will ramp up and we will move down to what we're calling the Tardif Project. And this is our more traditional large-scale operation. And this one, our target will be to enter production within that 4 to 5 year mark. So this is where North T is this ramp-up profile. This area here is Tardif. After that, we're then building in the flexibility in the organisation through our Wigu Hill project in Tanzania, with the target there that would be able to enter production once we start to flatline here at Mineralogy. And what that means is that will provide a growth profile for the company, which is able to continue to move up. The other thing that does is it provides us a great deal of flexibility in a year on year. Now, the way that we can do this, not all projects can apply this development strategy. That's just a fact of life. We've specifically targeted these 2 projects to meet our requirements. And the key thing here is mineralogy. Both Mineralogy and Wigu Hill come from the bastnäsite group. There's only 2 mineralisations which have successfully operated commercially for NdPr. First is bastnäsite, the second one's monazite. Difference is that if you look at the difference between the mineralisation and the waste, oops, sorry, wrong one. This here is North T. The red is ore, the white is waste. For us to beneficiate that product, it is simply a case of separating red from white. That ore I could give to anyone here with a hammer and you'd be able to produce a 35% con grade. Now, there's no other project in the world where you are able to achieve that. This is Tardif. This is a bastnäsite zone here. As you can see, this red mineralisation, once again, nice and coarse. So the idea is that we'll be able to use the same processing methodology as this. So any capital works that we build, or any capital expenditure we build on North T, can then be applied at Tardif. Wigu Hill, these large hexagons, that's bastnäsite as well. Once again, incredibly easy to differentiate between waste and ore. You walk around the site there, you pick up rare earth crystals that big. There's not many projects in the world where you're able to do that. And all of that is important to enable ourselves to be low-cost producers. Very quickly, Mineralogy, Stage 1. It's located up in the Northwest Territories. As you could see from the video, there's a little bit of snow up there. It's one of the things I found quite interesting coming from Australia, where you think we're operating up in the Northwest Territories, must be difficult. If this project was located anywhere else, we would not be able to develop it the way we are. We're about 100 kilometres from Yellowknife. For us, the mobilisation of our mining fleet occurred across an ice road, which we built from the site from Yellowknife across the site there. That cost us probably less money than it would than a typical mining company in Australia would pay to build a driveway. So what that means is that all the money which we're spending on the site is actually on process equipment. The project itself has two distinct zones. As I mentioned, we've got the North T, which is our startup, and then down here we've got the Tardif zone. That Tardif zone, previous owners, Avalon, spent about $120 million on a full feasibility study. So a lot of work has been put into it. North T, it is one of the highest grade rare earth deposits in the world. It is only small, but that's perfect for our means. It means that we can do this in a campaign, operate for a number of years before we move further south. As you can see though, we've got grades there, 20, 30%. I mean, this is as high as anywhere in the world. It really is. And we have then the benefit of the process and the mineralisation. So infrastructure is fantastic. We can get material in, we can get material out, we don't have to spend money. And that means everything we spend on site is going to the process. We have an offtake agreement with a company called RIU, which is a Norwegian company. I will flick through. Okay, our agreement with them starts at 1,000 tonne a year, which is excluding cerium. Cerium makes up about 50% of most of these projects. That's for an initial period of 5 years, which is that ramp-up profile. And that's for a minimum of 1,000 tonne. The option is then to increase that to 5,000 tonne for a period of 10 years. The agreement we have with RIU is quite unique in that we are working together. We both will see the upside of any sales. So what this means is the nature of the agreement is that whatever price RIU get for their product, we each take our operating costs out and then we share the profit. Now that is a unique arrangement in rare earths. So that means that we are working together and we both have the opportunity to grow. I'll just quickly come back. One thing which I do want to make a point of as well, we are located up in the Northwest Territories. The Northwest Territories have a very high Indigenous population. And the challenge is always around how you can maximise opportunities for Indigenous employment and contracts. The mining contract we have signed is with the Nahanni Constructions. They are an Indigenous mining company. This is the first time in Canada that an Indigenous mining company will be mining minerals on their own land. And that is a huge deal. And something which personally I'm very, very proud of. The other thing, when we come to, running out here. Second one, as I mentioned, Tardif, large scale. We have over 1 million tonnes of contained rare earths at Tardif. This is as big as what we need. It's bigger. So this is a massive, massive deposit. So while we're looking at our startup operation only being small, the potential here is huge. And this project, it stacks up against anything else in the world from a cost perspective, from a size perspective, and from an operational perspective. I won't go into the Wigu Hill project. As I say, we're currently in discussions with the Tanzanian government around a mining licence for that. And now that my time's up, I'd just like to thank you all for the time. I'll just leave you with one key takeaway point. Rare earths, as I say, the time is now. If every rare earth company which is looking at developing a project in the world today met their targets, we would be the only operating rare earth company within the next 2 years. History tells us as well that rare earth projects don't normally hit their targets. This means that we have got an incredible opportunity to take advantage of the current market, and it's one which I believe is unique. We have it's an opportunity which I don't believe there is another rare earth company. So for us, it's now about how can we take advantage of that. Thank you very much.